Hi guys, this is Andrew from Trading Mastery and welcome to today's trading tip. Now, clearly this is being recorded on Monday afternoon at California time, and I want to emphasize something here because we are heading into traditionally a very strong period for financial markets. However, in 2022, where you're likely looking to position some of your money, looking ahead, wondering what's going to happen next year, let me share with you my thoughts about where I think investors need to be positioning their money, certainly where I've got my money and where I think the danger is. There's a lot of businesses right now in the fintech space, in the technology sector, in a lot of the startups that over the course of the last 18 months to 2 years have had very, very significant amounts of money come into these businesses that now have very, very lofty valuations. I'm talking about businesses like DocuSign, businesses like Zoom, businesses like Zillow, even businesses like Tesla that simply don't have the very long decade-old story of significant revenue and earnings growth. Now, this is a very important point because we're likely going to see inflation persist here in the United States over the course of the next 12 months. We're likely going to see inflation probably at 4% or maybe even higher for at least the next 6 months. The US Federal Reserve later this week, early next week, is going to announce its latest policy decision. They're likely going to taper the stimulus faster, and they're likely going to signal to the market that if inflation stays high, they're going to raise interest rates. Now, that's not a concern to those of us that own amazing quality businesses that have significant revenue streams and earnings, businesses like Apple and Costco and Berkshire Hathaway, etc. But this is going to come, and it's going to be a lot of pain for those investors that own businesses in sectors of the market that have very high valuations that perhaps don't make money. Businesses like Airbnb, businesses like Zillow, businesses like Snowflake, etc., that have incredibly high valuations, very high PE ratios. If interest rates start to move higher, where is the money from money managers and sovereign wealth funds going to flow to? Well, it's going to come straight out of those more speculative stocks, those small to mid-cap companies, and it's going to go straight into the big cap stocks. The companies that have big, powerful, predictable earnings, and they're likely going to thrive with or without stimulus from the US Fed, and other central banks, of course, are doing the same thing around the world. So I encourage you right now to give real strong consideration to what's in your portfolio. Do you own businesses that have very significant long runways and a history of high earnings and high revenue and pricing power? In other words, able to increase their prices without having a lot of backlash from customers. A business like, say, for example, a Costco, only 14% is the highest markup of anything in the store. If it wanted to increase it to 15%, no one's going to complain. Over 90% of its income comes from the membership that people pay. If it wanted to increase that by $5 per year, nobody's going to complain. But businesses such as airlines, businesses in some of other industries that don't have those incredible consumer loyalty, like an Apple, a business that is a fintech startup, like a Square, something like that, may do poorly in a higher inflationary, higher interest rate environment. In fact, not may, it actually will do poorly in that type of environment. So give consideration to that right now. And of course, every second Monday evening, I run a live class for investors, retail investors around the world to join me in a live coaching session where I lay it out for you and share with you the way in which that we value businesses and the way in which we go about building a portfolio of wonderful global growth companies. If that interests you, make sure you jump across to our website, tradingmastery.com, register for that 7-part mini course, and you'll get an invitation to join me bi-weekly on a Monday evening, starts at 7:30 p.m. I wish you every success. Until next time, happy trading.